All right, good evening, everyone. I'd like to open up our meeting for the McLeod County Truth and Taxation tonight, December 5th. We'll begin with our Pledge of Allegiance. Could you please stand?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
First item of business will be our consideration of agenda items. Is there any additions or corrections to tonight's agenda? Anything?
I'll move on the agenda, and it's noticed that there, with that is the 3-minute time limit on speaking.
We have a motion to approve. Is there a second?
Second.
We have a motion by Kruger and a second by Schmaltz to approve tonight's agenda, as well as a 3-minute time limit for public comments. Is there any further discussion? Seeing none, we will proceed to vote. All in favor say aye.
Aye.
Opposed, motion carries. We'll now have a opening comment period by our auditor treasurer, Connie Kurtzman.
Good evening. Welcome to the McLeod County Truth and Taxation meeting. Tonight we will be reviewing the 2024 valuation used for payable year 2025 taxes, the 2025 proposed tax levy and rates, and the 2025 proposed budget. And then there will also be time for public comments and discussion. This meeting is not to discuss individual parcel information, whether that is value, classification, or taxes. If you do have questions regarding your individual parcel data, we will be providing time to take your name and phone number for a future call or visit. McLeod County Assessor Sue Schultz will now review 2024 valuation used for payable year 2025 taxes.
Thanks, Connie. So the assessor's office primary responsibility in this process is value and classification. And we do this by visiting properties. We're required to go there every 5 years as part of our quintet to review the information with the property owner to make sure that what we have is correct, that the buildings that we have on the field card are there. We check for condition of the property, and then we also visit if there's any building permits that are pulled. We gather the information that's there, and we take it back to our office, and then we actually put it into a computer system, and it determines our value on each property. So the 2024 values are used for the taxes that you pay in 2025. And this is based on sales that we get in from the office, or from the community, excuse me. By per statute, we have to be within 90% of the market, which means that when a sale comes through, we take a look at that value that it sold for, and we take a look at our assessed value. If it's underneath 90%, we are required to raise it above, to get it above 90%. If it's over 105, which is our limit on the upper end, then we're required to reduce it. For the 2024 evaluation, our sales study is always from October to September. So 2024, these sales that we look at are from October of 2022 through September of 2023. And that will determine any kind of value changes that occurred in 2024. New construction is also added the following year. So any new construction that was done in 2023 gets added to the tax rolls in 2024 for the taxes payable in 2025. At this particular point, we are actually about 2 years out of all the sales information that we have. We are actually in the process right now of starting for next year with the sales that we've had. So the next screen up on the board there gives you an idea of where we were at with our classes of property and by taxing district. The first column is agricultural, and that shows you the ratios that we're at. Now keep in mind that these ratios are supposed to be at a minimum of 90. Agricultural properties did see a significant increase again this year, as they did in the previous years based on the sales that have come through. Our average price per tillable acre right now is roughly $9,800 an acre. The residential is the next column. There again, we have to meet the same requirements, that 90%. Any kind of changes that we occur is based on these numbers that we get from, and this is looking at the sale price to our assessed value. The other thing the state looks at is how many qualified sales. For the state of Minnesota, if there's less than 6 qualified sales, then we are not required to make a value adjustment, even though we can. Once we hit that 6 sale minimum, then we are required by the state of Minnesota to make value adjustments based on the ratio. And so as you go through, the number of sales are to the right of each classification. And so then that way you can see too, like if it was only 1 sale, we may or may not change that value of that area for that classification. A qualified sale is what we look for on each properties. We actually do sales verification on each of them, and we're looking to see to make sure that it's an arm's length transaction. Relative sales, unusual financing, those kind of things can affect a sale, and they are thrown out and they're not part of the ratio study. Every year we do the sales verification on all ag land, residential, commercial, and industrial, to make sure we get all the accurate information. We also throw out any personal property, if they has sheds or not sheds, excuse me, air appliances in the house that are part of that sale price, they get thrown out. We are trying to get back down to just the real estate and not anything non-real estate. This next page is all the cities. There again, they follow the same rules. We have to be within that 90 to 105%. What happened this year is that our agricultural properties took a bigger jump in value based on the sales, where our residential pretty much stayed the same. There was some that had very little change or no change at all. So there was definitely a class shift of value in taxes over to the agricultural properties. This screen here shows you the percent changes that we did by taxing district and by class. So as you can see, the agricultural definitely took the biggest hit. Round Grove especially took a bigger hit. They actually hit 6 sales in their own township at a ratio of under 69%. So they went up more than the rest of the county did on their agricultural properties. If we do not make these changes, the state will come in and do it for us. They monitor everything that we do, and they require us to be at that 90%. They get 2 reports from us every year from our office. There's 2 reports from Connie's office as well. And they take a look at our value changes. One is for me, one is in April, and then one is in August, where they take a look and make sure that we're making the changes that they are requiring. Then as you can see, this is the city part of it, where they took very little. The city of Glencoe took a little bit of a jump. But for the most part, it was predominantly agricultural that took the bigger hit this year. So if you look at this page here, it just gives you an idea of what the overall increases by classes. This is county as a whole, not by taxing districts. On an average, agricultural went up to 21%, residential 4%, then commercial 1%, and apartment stayed steady. And this gives you the 5-year comparison going back. If you look at the top line, back to assessment year 2019, that year, the next year, agricultural stayed 0. Residential went up a little bit, but the apartments took the bigger hit. They were at 17 and 16% those years. And then it swapped in 2021 assessment and 22, and now this year. Agricultural has just been jumping in value in our county. Residential in 2021 took a bigger hit, and then apartments in 2022. So as you look at these numbers, each class of property can shift around, which can affect the property taxes on that classification of property. So we talked a little bit about the class shift. So the value of your property can affect your property taxes. The budget sets the levies. So the budget's going to set how much dollars the taxing districts need to collect. Your estimated market value is your share or your burden of that government cost. So value changes, like these significant classification changes, can affect your property taxes. It can shift the burden from one class to another. Values changes on individual properties. If you appeal your value and we reduce your value, your taxes could go down where your neighbors would go up. New construction, that can affect your property taxes. Classification change, if you're going from ag to res, there's a significant difference in classification rates. That can change your individual property taxes. or if it's a homestead change. If you lose your homestead or gain your homestead, that can change your overall property taxes. The market values that are on your TNT notices that you received are final. They cannot be changed after the County Board of Equalization that happened in June. The individual values that you had received in your tax statement last April had the valuation notice on there with your dates of meetings. Once those meetings are passed and the county board is passed, those numbers become final. So tonight, if you do have questions about your value or you want to have some discussion about your value, we can adjourn to the neighboring room over here and we can go through general questions. We don't have very specific information, but what we will do is go through general questions and I'll take your name and telephone number, and the assessor in your area will give you a call to either schedule an appointment or be able to answer more specific questions.
Okay, do we have any questions at all in dealing with the assessor's report before she goes to the neighboring room to meet with anyone who's here to deal with a specific parcel? So we do have our meeting tonight broke up into 3 sections. We have our assessor presentation, public comments and discussion, then we have our auditor treasurer presentation with comments and discussion on that, and then we go into finance. So this would be perhaps before Sue leaves, the last opportunity to ask a question for everyone to be involved in the discussion on the assessor's portion of the meeting. Is there anyone who wishes to go with Sue to the neighboring room? Okay, we have a few. Go ahead, please.
Thank you, Sue. Let me just start. So after Sue has completed the county valuation determinations, tax capacity is calculated, followed by tax calculation. On this screen, you can see the impacts to levies, the impacts to tax base, and then a listing of the taxing authorities. I would like to review some of the definitions that may come up this evening, just so that you're familiar with them. The levy is the amount of money that a taxing authority needs to operate, and that money is raised through the property taxes. The tax base is the total value of taxable property within the community. The tax capacity is a parcel's taxable market value multiplied by the class rate, and that is mandated by the Minnesota Department of Revenue. The tax rate is the portion of the total taxable value of property needed to achieve the levy dollars, and then the levy divided by the tax capacity, again, is the tax rate. The total local tax rate is the total of all the tax rates of the taxing authorities that would appear on your tax statement. This chart lists the final and proposed levy dollars of all taxing authorities in McLeod County and the resulting percent increase or decrease of those proposed levies. Townships are listed on the left, and cities, schools, and county and specials are listed on the right. You will see that McLeod County's increase to the property tax levy is proposed at 2.5%. And then you can go ahead and review your own individual taxing authorities. So like I live in the city of Hutchinson, they are proposing a 7.9% increase. Also on my tax statement would be the 0423 school district. They're proposing a 5.5. And then McLeod County, of course, would be on there. And then the special districts of Hutchinson HRA and Hutchinson EDA would be on mine. So next, let's review the 3-year comparison of McLeod County's tax levy by fund. The 3 highest fund contributors are revenue, which is orange in color, and those are expenditures for employee wages and benefits, capital, public safety, so that would be services of the sheriff's office and legal services and technology. Health and human services is tan in color, and then road and bridge is maroon in color. The Minnesota Department of Revenue's 2025 preliminary property tax levy report, it did indicate that the average Minnesota county levy increase was 6.4%. So for payable year 2025, if approved at 2.5%, McLeod County would be below the state average by 3.9%. And for payable year 2024, McLeod County was below the state average by 1.7%. So where do your property taxes go? McLeod County has 40% of the property tax dollars, which is a decrease from 2024. The cities took that 1% increase, and the rest of the authorities remained approximately the same. What, again, does the county do for you? We deliver a wide range of services to a growing and changing population. There are services that the public has come to rely on. We're here to maintain your roads, maintain your property records, protect the health of the community, protect the environment, provide justice, and provide protection. This is a new information for you for this year. It compares the value and percentage of tax for 3 years, including payable year 2023, payable year 2024, and payable year 2025. Each one of those individual charts represents one of the years. The data is provided by a classification. That's the first column of each chart. And then the tax dollars, then the estimated market value in total, land and building together. The tax dollars is the third column, and then the percent of tax is the fourth column. So if we want to look at the last column here, or the last quadrant, we have assessment year 2024, and that's used for payable year 2025 taxes. You can see that agricultural pays approximately 20% of the tax, residential pays approximately 55%, and commercial industrial pays approximately 21%, and apartment pays approximately 4%. But what's interesting about these numbers is another comparison with tax and values and who is burdened. Because when you look at agriculture paying approximately 20% of the tax, yet their value is comparable to residential, who pays 55% of the tax. Also, ag's percent of tax is comparable to commercial industrial, that approximately 20 to 21%, yet ag has far less value at 2.5 billion less. I should also mention that the data on this page is only reflective of real property and does not contain amounts for personal property or manufactured homes. Changes in rates impact tax statements. This is a parcel in the city of Winstead. 2024 to 2025 taxable market values and classifications have remained constant. But you can note differences between 2024 and 2025 due to the rate changes. McLeod County taxes have decreased. The city of Winstead's taxes have increased, and school district increased a little bit and special districts decreased a little bit. But if you note the bottom line, the actual payable year 2024 to proposed 2025 taxes increased 5.82% in total, yet not all of the taxing authorities' taxes increased. So you can't just look at the bottom line and say, oh, my taxes all went up, because that's sometimes not the case. Like in this case, McLeod counties went down on this tax statement. Legislative changes impact the tax statements. So these were two legislative changes that were made for payable year 2025. The homestead market value exclusion did apply to homes valued under $413,800 and now applies to $517,200. I don't believe the homestead market value exclusion calculation had been updated since it was enacted in 2012. And then it's important to note that both non-ag and ag benefit from the change to the homestead market value exclusion. And the value increase between 24 and 25, you know, that part that was essentially excluded, is almost $94 million. So 48% was given away, and then that just gets shifted to another class. The agricultural homestead first tier is generally increased each year, but not to the extent that it was increased for payable 2025. And so together, both of these changes have shifted the tax burden to other classes of property. Okay, legislative changes impact tax statements. This is a parcel in Bergen Township. The 2024 and 2025 classification is steady, and then you will note in the lower right quadrant that the homestead market value exclusion has increased from 9304 to 18614. And so that has resulted in the taxable market value of this parcel decreasing by $9,310. So when using that lowered taxable market value in the tax calculations, all taxing authorities now have a reduction in taxes, whether or not they have increases in their levies. And so the bottom line is this parcel's taxes decreased $292 or 8.77%. And this is again part of that shift of the homestead market value exclusion. One of the reasons agricultural sees a break on their tax dollars is the agricultural school building bond credit. As approved by legislators, all property classified as agricultural, rural vacant, and managed forest lands, excluding the HGA, house, garage, and 1 acre, is provided a credit to relieve the tax burden of bonded debt levies. It was established at 40% and now caps at 70%, excuse me. And so over the 8 tax cycles since inception, the direct dollar credit off of taxes paid has accumulated to over $7 million. This chart compares individual tax parcels by classification for 3 years. So on the left, there are the different classes in bold: ag homestead, ag non-homestead, residential, and commercial. And then bolded midway through the chart, there are tax increase and decrease for comparing 2023 to 2024, and then also the tax percent change. And then again on the right side, 2024 to 2025, excuse me, the tax percent change. So you'll notice in the midsection, the tax burden shifted from commercial and residential to agriculture. They were lessened and red in those, and then agriculture went up. And then in the columns on the right, the tax burden shifted from residential and agriculture to agriculture. So some of those agriculture parcels where they are seeing that tier break are actually shifting more of the burden to more agriculture parcels. If you'd like to further understand property taxes and learn on your own, I would encourage you to watch the video that we have posted on our McLeod County website. It is 1 hour in length, and if you don't have 1 hour to commit to that, I would suggest you move forward to the 13.5 mark within the video that shows some examples on how values and levies impact your taxes. Listed here is the 3-year comparison of values, capacities, and rates. McLeod County's local tax rate decreased from payable year 23 to payable year 2024 by 3.5%, and if approved, the payable year 2025 will decrease from 2024 by 1.8%. As a side note, within the last 4 years, the McLeod County rate has decreased 12.4%, and McLeod County's 10-year average local tax rate is 54.651. The proposed payable year 2025 rate of 46.029 is 8.6% lower than the 10-year average. My last slide is the 2025 proposed levies per capita, and that's essentially what each person in the county would pay towards the levy. So the good news for 2025 is McLeod County ranks 33 out of the 87 counties. The number one spot is the lowest per capita value, so moving up is our goal. In 2024, McLeod County was 35, so we've gained 2 positions. Mid-chart, the maroon bar represents McLeod County with $798 for each person. The orange bars are neighboring counties. The average of that is $905. And you will note on the chart the higher per person amounts for counties with higher agriculture parcels, Renville and Sibley. And then also note on the chart the lower per person amounts for heavily populated counties with more commercial industrial properties at a higher tax base, so Carver and Wright County. And then the tan bars are similarly populated to McLeod County counties, and their average is 824. Whoops, you guys. Oh, there, it's there. Okay, are there any public comments or discussion? If so, please proceed to the podium.
Just a couple of things to add, Connie. There are 2 pieces of information that I found pretty intriguing in your discussion. Slide number 19, which is something you added, showing the changes. I appreciate the work on that. I think that is a page that we should definitely make sure winds up in our township packets in March, because that does a really nice job of showing that shifting of the comparison. And quite honestly, when you look at the burden that is pushed on the commercial property, it kind of tells a story as to why there's so much commercial growth right outside our state lines with that, and that's all things that are beyond our control. The second piece that is quite interesting with the residential homestead exclusion, taking out over $93 to $94 million that is accessible, and just has to push that tax burden onto the other parts. As again, it's a legislative action completely beyond our control here, but the impact is quite substantial. So this is the opportunity to address the board and our Auditor Treasurer's Department with any questions on what you've seen within this presentation. So is there anyone that would wish to come to the podium? Okay, we'll conclude that part, and we will call then on Finance, Colleen Roback, Finance Director.
Good evening. This first slide is the annual budget process timeline. So budgets are sent out to the department heads and outside organizations in early June, and we had the directive to keep their operating budgets at a 0% increase. Budgets were returned to the finance office in early July and reviewed with the budget committee through August. The budget committee works with the department heads for potential cost savings and reviewed outside organization requests to keep those to a minimum. The preliminary budget was approved on September 17th with a 2.5% increase to the 2025 tax levy. The levy increase of $717,525 was allocated to the Road and Bridge Fund in order to keep this fund in compliance with the McLeod County fund balance policy. Also, a portion of debt services levy dollars were reallocated to the general fund. The final levy will be adopted at the December 17th county board meeting. The total levy can decrease but can't increase from the preliminary levy that was set in September. These are the funds that impact the tax levy. Each of these funds are budgeted to use fund balance to cover the difference of expenditures over revenues in 2025. If you look at the road and bridge, that looks like it's the one using the most fund balance, but the good news on that is that the county road projects will be paid out of local option sales tax, and these funds have already been collected over the prior years. And then I just want to explain how our fund balance policy works. McLeod County's fund balance policy requires no less than 5 months of operating expenses be retained at year end. And this policy meets the requirements of the Governmental Accounting Standards Board, as well as the recommendations of the Minnesota State Auditor's Office. These funds do not impact the tax levy. Solid waste is using some fund balance in 2025 for capital purchases as well as to cover recycling costs. And then the special revenue fund is made up of several funding sources with money allocated for specific purposes in separate accounts. And these funds are collected before any expenses can be made out of those accounts. And on this slide, this is a breakdown of revenue by fund. The general fund accounts for the majority and includes several departments: general government, public safety, public health, culture and rec, conservation and natural resources, and economic development. Road and bridge is the second largest revenue source, followed by human services, solid waste, debt services, and special revenue. And this slide breaks down the expenditures. The general fund accounts for the majority and is broken down on the left side, actually by classifications. And there are several departments that make up general government. I want to spell those out for people that aren't aware of what's all involved with general government. So it's countywide, commissioners, court administration, auditor treasurer, information technology, central services, county insurance, safety, elections, attorney, recorder, assessor, county buildings, veteran services, and license center. So that is the biggest piece of the pie, but there's a lot of departments that provide a lot of services in that general government. Then road and bridge is the next largest, followed by human services, special revenue, solid waste, and debt services. Here are the general fund capital requests that were approved in the budgeting process. So this just lists them out if you want to take a look at what's been approved for that. We can go to the next one. And then this slide is the rest of the capital expenditures that were approved in the preliminary budget. The total capital assets that affect the tax levy are about 1.7 million out of this 4.225 million. And this slide, this is the McLeod County's outstanding debt at year-end 12/31/2024. At year-end, the county's outstanding debt levy is $11,295,000. The additional debt of 4.5 is through special assessments. Okay, here is a 10-year comparison of the tax levy. So you'll see how in 16 it was at 2.7, and then in a few years down, 18, 19, 20, we had higher increases, and it's leveling off. We were able to keep it to a 2.5% increase in the levy for 2025 with operational savings. And here are some things that affect the budget. So when we're considering the budgets, we take all of this into account. Under cost drivers, the county bears the cost of underfunded federal and state mandate services. An example of that is this new Family Medical Leave Act that McLeod County will have to start paying in 2025 to the state of Minnesota. And then service demands. Service demands continue to increase for health and human services programs such as child support, financial support, family child care, foster care, adult and child protection, mental health, disability services, vulnerable adult investigations, Min Choices, vaccination clinics, WIC clinics, and many other services. And then as a service organization, McLeod County's wages and benefits make up 44% of the expenditure budget. Personal wages and benefits for 2025 are budgeted at over $30 million, which is higher than the levy. Cost of living increases are projected at 3% increase for 2025. Health insurance costs continue to rise each year as well. The McLeod County Health Insurance Plan's premiums increased by an average of 14% for 2025, with 8% of that increase at the county's expense. Capital expenditure requests keep McLeod County buildings and equipment in good working condition, so they are a necessity. Technology maintenance is necessary to keep up with the hardware and software requirements for the various programs that we use within the county. And then some cost relievers. The county has budgeted to use $1.5 million from the ARPA funds for capital improvement for the fairgrounds and parks in 2025, which will not impact the levy. We continually review staffing requests on an ongoing basis. Looking for opportunities for efficiencies is a priority to the county. In long-range planning, focusing on long-term cost savings opportunities when possible is important to the county. And the last one I have on there is lost revenue. We are budgeted to use $2.8 million for 2025, which covers, or we're expected to receive, lost revenue of $2.8 million, which covers the principal and interest in addition to building the highway fund balance for county road projects. And if there's any question, please come to the podium.
Thank you, Colleen.
It's the opportunity for questions or concerns to come forward about the finance report. Anyone? Okay, see nothing. So with that, be the last call for any questions or concerns to come from anyone who's attendance, public forum, or press relations. Okay, seeing none, we will then ask for a motion to adjourn our Truth and Taxation meeting.
So moved.
Is there a second?
Second.
We have a motion by Nagel and a second by Kruger to adjourn tonight's Truth and Taxation meeting. Is there any discussion?
Mr. Chair,
Go ahead.
thanks to the department heads that were here. We appreciate that. And also, I got a note that the 17th, we recognizing Commissioner Luthen's on his retirement.
Okay, very good. Thank you for that. Any further discussion before we adjourn? All in favor, say aye.
Aye.
Opposed, motion carries. Thank you for the